welcome. This is the Curium webinar series. We've been running these for over a year now on different topics. I'll do a very quick round of introductions. So start with myself. My name's Tatiana George. I'm the CEO and co-founder of Curium. We are primarily a technology platform that specializes in all questions, claims and compliance in insurance. But recently we found ourselves being big advocates of general technology innovation, but also solving different kinds of problems that relate to primarily compliance and claims. Today with us, we've got the representatives of the ANZ Bank, Darren and Michael, and I will pass on the mic to them to introduce themselves. Darren?
Hi, my name's Darren Ellison. I've been with ANZ for just over 13 years now and travelled around the banks within Australia for quite a bit and spent a bit of time in mainland Europe working with large multinationals. I've found a niche working with insurance customers, and part of that is helping insurance customers adapt to the existing and the new ways of managing liquidity and cash.
Thank you, Darren. Michael?
Hi, Michael Jakovic. I look after payments development within the product business within institutional. I've been at the bank a little bit longer than Darren, 23 years, so almost up to the quarter century, spending time across retail, commercial, institutional, and also spent some time up in Hong Kong across various disciplines, being channel, product, strategy, and business management.
Thank you so much. So the reason we wanted to have this webinar is to demystify some of the potentially technical aspects from the point of view of technology, but also from the point of view of implementation and getting on board with instant payments. There are a couple of myths in the insurance industry specifically, insurance industry not being famous for embracing innovation, among the first ones. But we believe today, if you walk out with a good understanding of what instant payments are and what they mean for the insurance industry, but also for the broader economy in Australia, I think it would be a good outcome. So on that note, let's start, I guess, with you, Michael. Just tell us in very, very simple terms, what is the new payments platform and what is an instant payment?
Sure. Thank you, Tatiana. So MPP is probably what your audience has heard a lot about in an Australian context, and what that stands for is New Payments Platform. What it actually is a central infrastructure that facilitates near to real-time payments here in Australia. About 5.5 years. It was launched back in February 2018. So not sure if it's so new anymore. I'll let you and your audience decide. But the genesis of the MPP goes back actually to about 2013 in Australia, when the Reserve Bank released its strategic review to the bank sector. And what they sought from that review was a data-rich, 24/7, so always on, highly available, and near to real-time payment system as part of their core recommendations. And the rest, as they say, really
Okay.
I might actually just move into a couple of other things, if that's all right, Tatiana, and maybe talk about what the MPP actually does and yes, what RTP actually means. So as I mentioned, the MPP facilitates near to real-time payments here in Australia on a 24/7 basis. So whether it is during the day, whether it's 3 a.m. in the morning, weekend or public holiday, the MPP is working, sending and receiving payments in near to real time. The two key brands that define the MPP experience from a customer perspective, which perhaps some of your audience have heard of, is OSCO, and that relates to the payment experience, and then PayID, and that relates to the ability to send payments to aliases such as mobile numbers, email addresses, or ABNs. Now, in the case of OSCO and PayID, the near to real-time experience is defined as, and this is across the entire ecosystem here in Australia to which the subscribers of these services sign up to, is that 99% of payments are processed within 60 seconds end to end, and 95% processed within 15 seconds end to end. And what I mean by end to end is from the point that I press a button, or you press a button, or any of your audience actually press a button to send a payment, that payment is actually received in the beneficiary's account and has funds ready to be used within that 15 to 30-second time frame. So interestingly, in the consumer world of these OSCO near to real-time payments, everyone here has probably been sending them for many years now, but may not actually have known that they've been sending them, or as aware that they were actually sending them and they were being received in close to real time. And the reason for that is that most banks and financial institutions have actually defaulted their pay anyone within their digital banking experiences to OSCO.
So I might pause here and just bring it back to the context of where we are. So in insurance, there's a lot of money going in and out of insurers into bank accounts of suppliers, people who are insured, and so on. And normally, it does not apply to the entire industry end to end, but I like to take use case by use case. So one of the things, for example, insurers pay billions of dollars a year in claims, right? It's like the biggest payout on their P&L. And so when we actually start looking deeper into the how is it done and what does the customer get at the end, we do find that the processing the payment out from the claim system into the payment system into the bank, and then back reconciling from that's been paid, not bounced back, received or paid, and then reconciled back to the claim. This process can take something like from 2 to 10 days, depending on the size of the operation and how often those pay runs are done. So what does that mean for the person at the other end, the one who is receiving? And I'd like maybe move to Darren and give us a little bit of a background to from today, where people need to wait from 2 to potentially sometimes 10 days to get paid, to the new world where we're in already. What's the impact of this?
Yeah, the impact of this for insurers really is the ability to understand who they're actually paying, and the fact that they're getting an immediate response from when it actually does get executed. So what we're trying to attempt to do with a number of insurers is actually work with APIs to be able to deliver that payment directly to the claimant, or whether it's a refund or whether it's an emergency payment. And if there is a bounce back for some particular reason, that they've got that information immediately and can address that on the phone. And that could be anything from an incorrect payment to an account. It could be the pay ID may have been entered incorrectly and may have an incorrect character within the email field. But ultimately, it's about getting the funds to the beneficiary, and if it does bounce back, then they're aware of that immediately and can rectify the situation without having to go through that process of waiting for banks for 2 to 3 days, if not more, to receive their reply files as to whether it's bounced back or not. So in the context of it, you're able to remediate immediately.
And give us a broader context, socio-economically. What does that mean in the new world?
Well, in the new world, it's let's say you've got let's talk about internal displacement monitoring and some of the information and figures that have actually come out. So between 2008 and 2015 in Australia, 55,000 people were displaced in Australia from their accommodation. Between 2016 and 2022, that figure jumped to 188,000 people displaced, 81,000 from wildfires, 68,000 from floods, 39,000 from storms. In a lot of these cases, they've been able to pack as much of their personal belongings into a car. They've run out the door, maybe with their mobile phone in their pocket, and they've tried to escape where they are. Now, if we're talking about more statistics, 48.4% of Australians live live paycheck week to week. So a lot of Australians, while insurance is almost mandatory these days to cover a lot of your assets, there's a lot of the Australian population who require the support of banks, require the support of the government, require support of insurance companies to be able to go and find accommodation. And to be able to do that, they need money to be able to go and pay for that accommodation while they're out, and while assessors are taking time to be able to get in and assess the damage that has happened from those events. And those events may still be ongoing over that period of time. And we know from the Lismore floods, for instance, it took assessors, several days, if not weeks, to get in and assess all the potential damage and, fully understand and comprehend the claim size from those sorts of events.
Yes, and I can also attest that a lot of suppliers to insurers are actually family-run or small businesses. And I would say they would definitely fall into the bucket of living paycheck to paycheck in terms of being paid by the large suppliers. So if it takes a week or 10 days to receive the money for the job that you've done 2 months ago, it can be a significant strain on, the survival of that small business. So the consequences are big and significant. And I guess the message that we are trying to bring to you today is, whilst instant payments seem like maybe a thing of the future, they're actually a thing of the present. They're already here. And as both Michael and Darren were saying, we probably were using them for a while without knowing, and in other spheres of life. For insurers and for the insurance industry, it does come with a bit of a change in thinking, how to implement, how to think about them. And Darren did mention briefly that there is an API that's required. And Michael said, yes, it's a 24/7 platform. So there will be an amount of change that insurers need to carry out, both operationally, but also in terms of systems, to actually make that work. Because if you keep the old process and use the new platform, you'll still have delays that are caused, internally. So I guess maybe we'll try to have a very brief technical understanding of what is required to make this work. And I will open the question either to Michael or Darren.
I guess from a product perspective, what we've tried to do, Tatiana, and I'll allow Darren to put the insurance lens over the top of it, but from a product point of view, what we've tried to do is create different pathways for our customers to connect into and utilize the MPP infrastructure from a corporate perspective. So you mentioned 24/7 APIs. That's absolutely a methodology that we have available in terms of making that connectivity via a system that works quite well. APIs work very well in the 24/7 near to real-time nature. So that's one pathway that we have available to our corporates. But we've also made available other pathways, for example, and I don't want to get too technical, but SFTP or file-based connectivity, which is a different way of actually connecting with the bank to manage their MPP payments, which is probably less about, to be honest, this use case today, which is more instant, as Darren has said, and that reconciliation element, but it is a different way to connect, and it recognises that different customers are at different parts of their journey in terms of their technical infrastructure and wanting to use MPP in different ways, and therefore we make available a different way to connect for those different clients. So it's kind of horses for courses at a very broad brush level.
And I would also say the amount of fintechs that do payments has exploded in the recent years. So there's quite a bit of technology advancement happening in this. It's just more, I guess a lot of insurers are facing the problem of legacy systems and how does that connect and how does that work and what can we do? It's definitely something to remember and to consider. But I did want to shine the light a little bit more on practicality and some more use cases that we're seeing, and maybe the benefits of actually going through this, somewhat difficult technology exercise. So one of the benefits, so we did speak about the instant payment to a claimant, for example, or to a repairer, and the fact that when the claims handler presses that final button, yes, send pay, the cash actually moves the bank And if the APIs and everything is working properly, then essentially that person can see in what Michael says, near real time, I'd say probably 15 minutes until all the tech works, that they could actually be able to see if the payment went through. So whilst this is nice to have and has a big impact for the customer, what does that mean from the operating model? And in my calculations that I've been doing on various companies, it can actually save up to 50% of finance and reconciliation effort. So that's quite significant in terms of productivity gain at the back. Now, there's also a lot of concerns as we, evolve in the digital world about security and cyber. And I would like to ask both Darren and Michael, given that we are relying on technology pretty heavily here, what do you reckon are the risks, and do you think they're greater than what we face now? And cyber, think about security, fraud, all of these, what can go wrong about the process?
From an insurance angle, I'd say that we have witnessed an uptick in fraud lately. There is a lot more scams out there. There are a lot more, compromise of accounts. There's situations where direct debit is being compromised, for instance, and direct debit is one of the largest collection methods for insurers to be able to collect their premiums. And we are witnessing people accessing account details, and it's occurring across multiple insurers. And it could just be that you're issuing a corporate check and that person or someone's intercepted that check and been able to get your BSBN account number and then gone off to someone else, whether it could be an investment fintech, for instance, and entered those details and drawn out of your account. Now, you may not be aware of that reconciling next day. So that fraud has already been perpetrated and you weren't even aware of it. So this is where real-time payments, and particularly Pay2, which is the request to pay mechanism, will actually create a little bit more value on your collection of premiums. So what it will do is the ability to send a mandate to a customer's bank account, and that mandate would need to be approved by that actual customer within their secure banking environment. So they will see it, they'll authorize it, and then they will allow you to draw premiums, whether it's cycled based on fortnightly, monthly, quarterly, yearly, or it could be variable amounts, flexible amounts, and it's obviously being structured across various industries. So, it might be at that various, variable amount that you might be looking at topping up. So Pay2 will give that validation that who it's being sent to is actually who is signing up for the policy. And you'll be able to draw those funds out of that account based on what's been agreed. It'll do away with things like direct debit request forms, direct debit service agreements. You'll get validation of the person who you're actually trying to debit. It won't completely do away with, the potential of fraud. There are instances out there where we've seen someone acting as a mule, we'll call it, someone who's, has the legitimate account, but has been forced to manage these sorts of fraud or perpetrate this sort of fraud. But, once you start to get down into the individual sort of aspects of it, it can be quite personal for a lot of these people. But Pay2 it doesn't do away with it all, but it does help mitigate a lot of that risk.
I'd
agree, Darren. Sorry.
Please go ahead, Michael.
I was just say I agree, Darren, and I'd add to that probably 2 points. We think about MPP and how it differs from the point of view of existing infrastructure, payment infrastructure, and then we put a cyber and a fraud lens over the top of that. Where we see most of the fraud is actually scams, social engineering. It's not necessarily a flaw in the infrastructure itself, the banking app or the piece that sits behind that. It's actually good old social engineering that tends to be the major precipitator of fraud. In a Pay2 context, when you think about that then, and Darren's points around authorization happening behind or within an internet banking security environment, really reduces the opportunity for that type of engineering when you couple with that two-factor authentication as well. So not only is that user expecting something in their internet banking channel because they've agreed to a service. So they see that come into their internet banking channel and have the opportunity to authorize it. But many of the banks are taking the view that beyond that, we'll actually add another step of security, which is two-factor authentication around that approval. So for those reasons, as Darren said, we will certainly expect to see reduced incidents of fraud vis-a-vis direct debits today, where those controls just don't exist.
I would also add, depending on the size of players, and I see it primarily with smaller companies, there's another risk which is very, very easy to mitigate, is when people who work in finance take the files from one system and move them to another system. They often forget that move often happens in an unsecured, unprotected environments. And sometimes, rarely, but these files containing private BSB account information and names of people, they can get lost, like sent by emails. This is then becomes prone to, social engineering intervention, or stored on, let's say, a desktop while I'm, transferring quickly somewhere here and there, and then the laptop gets lost. So there are a lot of these, unfortunately, cracks in the current process, and they do not add to the overall, security of the end-to-end payment. And I am a big proponent of, not making people part of the problem, but supporting them to solve it. So in that instance, if you're removing manual interventions, you are actually improving the process and strengthening the security around it. Now, Darren mentioned, and we did exchange these things, Pay ID, Pay 2, maybe just a brief understanding from Michael. So we did mention though, but just give us maybe the definitions. What is a Pay ID and what is a Pay 2, and what do they do and how are they different?
Sure. So a Pay ID is what we call an alias, or just a different way for a payment to be sent versus a BSB in account today. So if we rewind before MPP, there was only BSB in account that someone could send a payment to. Fast forward into the MPP context, and we can now send payments to a mobile phone number, to an email address, or to an ABN. Still linked to a BSB in account in the background, but we're actually addressing payments in a different way. So that's what a Pay ID is. Pay 2 is the next evolution of the new payments platform, which I mentioned kicked off in 2018, and it introduces, as Darren said earlier, a request to pay type service. Now, what I mean by that is up until today, only push payments were possible over the MPP framework. So I could push a payment outwards to you, Tetiana, to Darren, or anyone on this call. Pay 2 introduces the ability for someone to go and collect funds, to pool funds. And that is done on the basis of an authority being sought first for that money to be pooled. So if I'm a corporate insurance company, potentially utilizing the Pay 2 service, I can send a request to one of my customers for an insurance premium, for example, over 12 monthly installments that will be received in the internet banking, the channel for which that particular customer actually banks. That customer then reviews that request, 12 months, X amount of dollars each month. If they're happy with that, they then accept that within internet banking. And that then provides the authority to the insurance company to go and collect those funds in line with that agreement 12 times during that course of the year for the X amount of dollars each month. So that is a very simplistic summary of the Pay 2 service, which was launched this year.
I would add probably another interesting use case, and that is collection of excesses. A lot of insurers rely on third parties to collect excesses on their policies. And as we said before, some of these third parties can be literally, one family shop. And if you ever saw an insurance policy, you'll be overwhelmed by the creativity of how you can calculate the excess based on what circumstance, which amount applies to you. So that creates quite a lot of confusion already inside of the insurance operation and claims to decide which one you need to request. But then when it comes to the third party, let's assume a car repairer, that's when the catastrophe is bound to happen, because a lot of them just get it wrong. And unfortunately, in the current world of, massive lags between the time that you've requested that access, by the time that somebody collected it, by the time you actually know that they've collected it, received the cash, reconcile the cash, and then compare it between what did I decide the access should be on this policy versus what did I receive as a factual cash in the bank. Often we're looking at weeks that have passed, and often, at least in my previous career, but also in the current work that we're doing, we're seeing a lot of leakage. And you can apply this not just to motor repair shops, but to a whole range of third-party providers, suppliers that you're using. So with the pay to, if you're basically claiming back the ability and the right and the ease to request that access directly and reconcile it directly. So you don't need to run any of the exceptions reporting or reconciliations or manual checks of that. And effectively, you'll be targeting one of the larger sources of leakage in the claims context as well. Now, I would like to ask Darren. I mean, we're advertising, saying it's great for you to do it. What happens if you don't do it?
Well, there's no sort of, if you don't do it, you're going to fall behind sort of thing. I mean, you're still able to process payments. The direct entry network is still available. It's a little bit slower. However, when you start to look at the context of claims and receiving premiums, for instance, let's say you've got a claim and you want to be able to make that payment, or you've got a refund that's due, there's been a total loss and you're trying to refund the annual premium, or you've got an emergency payment. Without the ability to actually make a real-time payment, you're not providing that same level of customer experience as what your competitors are. So when you start to think about that person and that experience in a time which obviously insurers have to deal with, when they're when an event has occurred, they're probably upset and they're having to deal with that sort of situation. Being able to get the money to them as quickly as possible, and in a lot of cases while the claims person is actually on the phone, it adds such a strong message to those clients that your organization is there to support them, to help them through, while the idea is to not pay a lot of claims. That customer experience does mean that churn does start to reduce, and that's really important from that perspective. When we're also talking about the ability to make premiums, for instance, and receive your premiums, we need to be aware that 1 in 3 Australians have missed payments, whether it's to financial institutions, whether it's mortgages, insurance, or card payments in the last year. We need to consider that 15% of Australians change banks or bank accounts every year. 10% change credit card providers. And those are big numbers. So if you're trying to debit a premium from someone using Pay2, for instance, and they've changed banks throughout the year, normally you'd have to go and engage with every single organization from your direct debit to be able to change all of that. Whereas Pay2, for instance, will actually enable that to move with the customer when they change banks. So they'll be able to, they won't have to do all that extra work. The bank will migrate a lot of that service across and communicate that to you. So the ability to continue with premium payments and continue with that insurance policy without having to go back and say you haven't made your payment, that's very, very strong. And it does create a level of competitive advantage when it does come to that customer experience, particularly around, if someone's like, customer churn is inevitable in the insurance industry. But if you're doing a refund for someone and that's an immediate refund, they've more than likely taken out their insurance somewhere else. They'll remember that experience of having that refund paid immediately. And then when that other insurance company, they choose to go and, go to market again for their own insurance policies, they may actually say, I had a good experience with that particular insurer, I'm going to come back. So, there's some of the things to consider. And I guess putting a putting a cost perspective on it, when you're considering that, we're talking about Pay2 sort of doing away with direct debit. It's, the potential to replace BPay as an option to pay. So they're receiving the instruction to pay rather than having to enter a biller code or reference number into those fields. And some of those reference numbers can be quite long. They don't have to do that anymore. Or even using a card, they might choose another alternative. And we estimate that the cost for insurers to actually collect premiums off of cards per year is around about $400 million, give or take. But it's a large cost. So that Pay2 experience, while I absolutely understand that rewards points is really important to a lot of people, it is another component that they do want to put into their options around doing it. And we'll see companies like Coles and Woolworths, who generally drive change in customer behavior, they're already looking at Pay2 as a way to be able to collect payments and try and migrate customers across to be able to do that. And it might be via discount on your policy. It might be via creating other advantages or different loyalty programs that you might be able to support them with. Those sorts of things are things to consider.
Yeah, discounts in insurance is dangerous, so I'm not setting the precedent here.
Yeah.
There are already large Australian players who have moved into the new world. Without naming any names, maybe could you just tell us a little bit about what they're experiencing and what's the outcome? How do they feel about the new world?
I wouldn't say it's a new world. I'd say that real-time payments has been around for a very long time. If you look at some other countries, for instance, on where it has been available, Japan implemented instant payments back in 1973. Not always on, but, instant payments in 1973. So 50 years of instant payments in Japan. But now we're starting to see certain areas such as, the US start to look at instant payments. And now we've got the Fed now looking at a 24/7 always on sort of model, which will, transform a very check-driven environment into a very much more, digital environment for banking, being driven by Bank of America, JP Morgan. They're the ones who really want to, pick that up. We're looking at Europe, through the SEPA region, Pay UK, it's Collect India, e-mandates Asia. They're all bringing it all together. And when you start to consider what that will mean from not just a domestic instant payment, it will also mean cross-border instant payments. So as we get the networks together, and it will take time, but we're going to start to see that exchange happening a lot faster than what it does today, particularly when you could be waiting days for that to happen. And I think there's one other thing that I would add on to that is that e-invoicing. Many people probably have heard the term e-invoicing. They've had different experiences with e-invoicing, but right now the ATO, which is actually the current market organizer for e-invoicing in Australia, they've had the federal government mandate e-invoicing for all contracts under $1 million, so small businesses. So anyone who's contracted with the federal government for services with services under $1 million has to accept e-invoicing. So e-invoicing has to be accepted by and is already accepted by access points such as MYOB or Xero. When you start to consider what the ATO is now looking at is bringing the Pay2 proposition to link into that e-invoicing proposition, you're starting to create an invoice going directly to a payer, and that payer accepting a Pay2 agreement that was created at the same time as the e-invoice. So it's not just the banks that are thinking about this, and we're not just thinking about it from that perspective of and from a organization from a person to an individual. We're thinking B2B. How is that actually going to work? How can it work better, more efficiently? And how do you get the right information to be able to address, if you're a large organization, your payment times reporting requirements as well?
So I understand where it's coming from. Essentially, it's the emergence of a new ecosystem that's just going to embrace more and more businesses inside and outside of Australia. And from outside, of course, we will take a little bit of time to consolidate. One good message that I would like to communicate is we do have a little bit of experience doing the technical work at the back of it. And in one instance, it only took 14 data fields of an API to be transmitted between the system and the payment system to actually make all instant payments happen. So it's It can be a simple exercise. It can also be a complex one, depending on the size and the complexity. But I think it's absolutely worth considering moving to this. Now, I probably want to round up with us talking slowly and open the floor to any questions from the audience. And you can use the Q&A chat. Okay. All right. So we do have a couple of questions. 50% of effort saved is a lot. Where do the savings in productivity and finance reconciliation came from? It was a question from Angela. I think I can take a crack at that one. When people do the reconciliation, some people can take, let's say, 1,000 claims and all the payments that were made for those claims, put them into the bank. Everything is fairly easy because you download one file and then you upload that same file back. Where the manual effort comes in disproportionately is when there are bounce backs. For example, something went wrong, and there are different statistics to say of how many of them, depending on the time of the day and the day, whatever. It can be anywhere between probably 1% and 5% of payments that did not reach the destination. Then different companies will have different processes of how to deal with those exceptions, how to deal with them. And of course, you need to think about security. Some companies will have escalations to management levels. Some companies will have investigations into why this went wrong. So for a very small amount of payments, the effort to deal with them is disproportionately high. So part of the saving comes from this, because you don't need to do the exceptions at that scale anymore. And the other part comes from, if you have to reconcile, for example, recoveries back onto the claim, often, let's say if you're using a recovery agent, they will just dump the cash, and you have to go and figure out yourself where does it actually belong. Now, a lot of companies use bots and RPA kind of solutions to do the manual mapping, but a lot of them are not. So these type of things, they can actually cost quite a bit of time and money from that. Sorry, I'll just go through the next question. So my understanding is that we can currently only push information through the ANZ API for Pay ID. When do you expect we'll be able to pull the information from the API and validate the pay associated with the Pay ID prior to submission of the payment? Anyone wants to take that one?
That's a good question. Yeah, so we don't have that capability available today, but there has been some demand for that service, so that's something that we are looking at the moment.
So no date at some point.
Yeah, I'd also add to that while it's currently in development, what you will see if you log into your bank, for instance, into your own personal banking, you'll start to see Pay to little tabs in there. And when you go into that, you'll click on it, and most likely you'll have no mandates or anything like that, or contracts that exist within that today. It is available. It's just that no organization is actually able to issue or are issuing Pay to mandates at this point in time. So while it's been built for you and I as individuals, it's just still being worked through for corporates to be able to send those messages, to be able to pull payments.
Next question, does this include foreign currency payments?
No, that's a simple one. No, it doesn't. Domestic AUD only.
Yep. How does Pay2 change the landscape for the existing credit card company and payment platform in terms of profitability and market share?
Well, I think that's a really good question for those credit card companies from the point of view of what it would mean. I think generally what I will say, and Darren alluded to this through some of his commentary, is that Pay2 being an account-to-account platform and service, I think we will see certainly some economic advantages as billers start to take up the service and put that payment option out to individuals like us as payment options moving forward. So it does, I think, change the economics, and it's going to be a really interesting space. I expect we're going to see some material migration from the likes of cards to Pay 2 over time, and potentially BPay and obviously direct debits as well.
Yeah, I'd probably add to that. Sorry, I'd probably add to that that depending if you're using a gateway or a payment page, for instance, it could be anything from, Adyen or Worldline or Stripe or something like that. Most likely what we will start to see is that Pay 2 button start to exist on those pages. So when you do go in and you have the credit card option, the PayPal, you might start to see Pay 2 starting to be loaded on those pages as well when it does become available. So that's sort of, giving you an option, and you might want to, organize it with that gateway sort of provider to say, well, I want Pay 2 at the top because I want them to see Pay 2 because it's cheaper for me than actually receiving a credit card if you don't surcharge.
I'm looking forward to that time. Personally. There's a question about New Zealand. For organizations that have operations across Australia and New Zealand, instant payments also available in New Zealand?
My domain expertise is Australia, so I couldn't comment specifically. I do understand that New Zealand has been looking at instant payments for a while. They may even be there. I'm not sure, Darren, if you've got any insight on that one, but I can say that they were certainly looking into it, but I'm not sure they've necessarily launched yet the equivalent of the MPP, which we have here in Australia.
Correct. I believe there's a project underway in New Zealand to look at instant payments. At the moment, they've got a similar direct entry system to what we do here. However, it's 7 days a week. So you're able to make payments 7 days a week, whether it's a Saturday or Sunday. So it's slightly different, but that more instant, and they do have a few more exchanges that happen throughout the day. So it might be, delayed by a few hours. But in New Zealand, we probably will start to see that instant payment messaging build out over the coming years.
All right, and we do have one question. Not sure if we've addressed it or not. Any idea on the time frame as to when Pay 2 will be available on business accounts? I presume ANZ business accounts, or in general?
That's a good question. So maybe just start by answering that one in terms of where the industry is at the moment. Most of the consumer side of the industry, from the point of view of being able to receive a Pay 2 request for payment, for consumers to receive that in their internet banking app and then to be able to view it and authorize it or manage it, most of the industry is now hooked up and linked up from that consumer point of view. In terms of business accounts, that's a work in progress. From an ANZ point of view, we're very close to launching the availability of our business accounts, and the industry will follow, I'd say, over the next 12 to 18 months in terms of hooking up the business accounts to be able to similarly receive a request to pay, view, manage, authorize, etc. So the launch this year has been, and I think, again, this will probably be one for AP Plus that manages Pay 2 at an ecosystem level, has been a progressive launch, and there'll be more and more capability and features added over the next 12 to 18 months, including expanding the reach of the service moving forward.
Perfect. I'll give you 30 seconds to ask any other questions if you wanted to. But I think we've had an interesting discussion. Thank you for joining the webinar. We like to keep the time strict and respect your schedules. If you have any questions to either of the participants, please feel free to reach out to them directly, and I'm sure they'll be happy to answer all of your questions. And we'll see each other again at the next webinar. Thank you so much. Thank you, Darren. Thank you, Michael. And thank you, everyone who joined today.
Thank you.
Thank you.
All right.